There's about two sectors that I like right now. Daniel mentioned one of the obvious ones, which is housing. And if you're looking at mortgage rates, hey guys, do the homework yourself. What does 3% on a 30-year mortgage rate mean? They shot a video of this, found on Twitter, YouTube, live video, just showing a calculator. Simple. Say if you want to buy, I'm using this for big figures, not that everyone could afford $1 million house, but if you put $1 million in the home price, the down payment's $200,000, and you're looking at 4.5% on a 30-year, and with taxes, other fees, home insurance, it comes out to $4,900, pretty close to that. And 4.5% was where rates were, what, 2018? Not long ago. Now they're pushing 3%. So when you put 3% in that mortgage calculator, that results in a $4,200 payment, less than that. $700 you're going to save a month on your mortgage. And put that in a calculator. 700, doing it right now. Times that by 12. You get $8,400. Times that by 30. That's $252,000 without even saying you're taking that money and compounding it and growing it. Buy a house. The market is ripe right now. There's very little supply on the market. I talk to real estate agents everywhere. If you're a real estate agent and you say, please, I probably have at least 4 dozen, maybe more, real estate agents. And for me, I started looking for a house where, we've been in the same house for, I think, 10, 11 years now. So I was getting big, got more stuff, want to, get a little bit of a bigger house, nothing crazy. We started looking. I don't even know if we're going to buy a new house yet. I'm not sure, but we're looking. Every real estate agent I spoke to, every single one, went to about 6 or 7, not include real estate agents, but builders in different areas and stuff. Every one of them. COVID-19 slowed it down. May was okay. May started really coming back. This month is exploding. You can say, well, it's pent-up demand. There's not a lot of supply in the market. They're building everywhere. Interest rates are low. They're going to stay low forever. Not just for mortgage rates, which makes sense, but we're in a market where assets are going to be incredibly inflated. That's what the Fed is doing. They're going to do it long-term. Join it. You can hold up a sign and say, can't believe the Fed's spending this much money. They're crazy. They're destroying everything. Or you could get wealthy from it. It's up to you. Make the choice. You do whatever you want. I don't care. I'm just telling you. And if you can't afford a house, buy a couple of home builders because, man, they are on fire. I'm talking about demand. Demand that I'm seeing in real time, and it's not really factored in. I mean, these stocks are not trading. You got Pulte, I think, is off its highs. You have Lennar about 10%, 15% off its highs. Toll Brothers is, I want to say 20, 25% off its highs. So they've come back. I mean, they've gotten crushed in COVID-19. They've come back, but not anywhere near their 52-week highs. Outside of maybe 1 or 2 of them, but get exposure to this industry. I mean, look at where Sherwin-Williams is. The Home Depots we had in our portfolio, we sold it. They made a very nice profit in a short time during the whole crap's going on with coronavirus. It's still gone a little bit higher since then. I just think it's incredibly very, very expensive. But get exposure to the housing market. It's going to continue to explode. The conditions right now in the housing market, I've never seen this good in my 25-year career, ever. Low supply. People want houses. They can't buy. Every house in my neighborhood goes up for sale. It's like you better bid on it and bid the ask, or you're done. It's gone the next day. I'm seeing that. I'm hearing that from so many different places. There's a reason why you've seen so many more real estate agents out there. I mean, I probably have like 10 friends that are real estate agents now, and I live in kind of a small town. But let me know. If you're a real estate agent, let me hear from you. I haven't heard one person tell me that the market's not doing great right now. Maybe I'm wrong, but there's no bias to this podcast, guys. Whatever I hear from you, I've asked people all across the country, all across the world. This goes global. I love you guys. So many people email me from outside the U.S., overseas. It's awesome. But my job is to report back, right? This is a network. This is how we make money together. By emailing me, frankcurzioresearch.com, it gives real-time access to what's going on because a lot of these numbers are always delayed by 3 months. Look at the housing data is from May. New home sales, great number that came out. That's May. What do you think is going to happen in June? Because the economy get weaker? Yes. I mean, we're looking at Wednesday, the market's down 700 right now, but we have a Fed that said, hey, we're going to continue to print money. We're not even worried about the balance sheet. Who knows how long they'll extend unemployment benefits for? We'll see. But buying an asset, buying a home, never been better. I've never seen better conditions right now to buy a home than right now. And if you can't afford to buy a home, that's cool. Find a couple of home builders, do your research on them. Even if you want to buy an ETF, which, again, I don't, if you're going to buy an ETF, you don't need me, because I like to buy which one of those stocks, which ones in those areas are going to do the best. But start doing your research, get exposure to that. In the other sector, it's interesting because what we're seeing in the market where we have record amount of cash on the sidelines, a lot of people didn't know that, record amount of cash, more cash on the sidelines in money market accounts than any time in history. Or since, I think it's 1992, since they started keeping track of this, which is basically in history. And when you look at the money flows, what do we see in the market when it came up? We saw technology lead the way, made sense, coronavirus, people staying from home, Zooms that did well, software companies that did well, Microsoft did well. This company's still generating revenue. Amazon's, stores are allowed to stay open and everybody else was closed. That's pretty cool if you run one of those companies. You can stay open, but nobody else can. It's great. They did well. And then what do we see? We started seeing a rotation into super depressed value names like cruise lines, casinos, airlines, right? They surged. And we saw that. We saw money being pulled out of tech. So it's not a ton of more money coming into this market. It's a rotation of capital. So what you want to do is find where the next rotation is going to be. One of the laggers, the biggest laggers, was real estate. Now you're seeing a lot of money get pumped into real estate. Oil as well. Look at those oil stocks where they came off their lows. They're tremendously off their lows. They're still well off their highs, but these things crashed by like 70%. And Devon was 40, went to 5? To show where it is, double digits again. A lot of these names are up 100% from their lows, but they've come back. You've got to see a rotation to capital. And for those of you who think you missed a boat on airline surging or rental cars, cruise lines, casinos, one sector that has seen tons of outflow, the biggest outflows, the longest outflows in terms of weeks. I think it was 7 straight weeks of outflows, has been infrastructure. Infrastructure companies. Horrible, right? Businesses stop. These companies have a lot of debt. It's a horrible industry to invest in. But it's interesting because last week was the first week that I saw rotation of capital. Thanks, Bank of America. I receive all these reports. The first time that we've seen in pretty much 2 months, money flowing into infrastructure companies, individual names. Now, these names are cheap. So these names have a lot of debt. So what I want you to do is look at their debt schedule, see when that debt's due, because the smart management team has pushed out their debt. So if you see a company that has $100 million in cash and $1 billion in debt, if they have, not generating a lot of cash flow right now, and they have $400 billion in debt due over the next 2 years, that's not a company you want to buy. But if they have like $20-30 million debt due the next 3-4 years, so no maturity, no real maturities, you don't have to worry about that. Because now projects are coming back online. They left their equipment at these sites and said, okay, well, halted right now, coronavirus. Now they're getting a call and saying, okay, continue. So we're not buying a value industry without any catalyst, which I never suggest you do ever. Don't buy a value stock just based on value because you're going to get smoked. Buy a company at 20 that went down from 50 and say, well, it's a good value right now, and there's no catalyst or no growth catalyst, it's going to go to 10. Trust me, I'm speaking of experience. I've made that mistake plenty of times. But now you have business coming back online. Some of these companies have restructured their debt. And now you have an infrastructure bill, which both parties are talking about, which is likely going to get passed over the next couple months. And these are so depressed, these names, that all you need for them to do is go from bad to less bad. And they're going to pop 25-30% in like a month or two. So if you're a Curzio Venture Opportunity subscriber, I just came out my newsletter today. New recommendation, the 1 point whatever billion-dollar company. I'm saying whatever because I don't want you to dial in and see what company I'm recommending. It's in the infrastructure space. It's a small cap that's gotten crushed. Amazing balance sheet. They're going to see earnings explode because all the cost cuts they're doing to set up for that infrastructure plan, and they have a great backlog of business. which has been halted due to coronavirus, but now you're seeing all this stuff come back online. That's the next sector where you're going to see rotation coming in. You're starting to see it now. What you want to do is get in ahead of that big rotation. For me, I made the mistake recommending Delta in Curzio Research Advisory. And I got so many negative emails. I said, look, airlines are going to explode higher. It's ridiculous. Everyone told me I was crazy. We wind up stopping out because I was a little early. And then Delta exploded higher. I do that every single time and stop out. My job is to protect you on the risk side. If you listen to my webinar, I also recommended Southwest. You're doing fantastic on. And a lot of those names exploded higher. But this time, looking at the flows and seeing what I did wrong and seeing the flows finally start to turn into this sector, where you're going to see a lot of hedge fund money getting in here, a lot of institutional money flowing in here. Get ahead of this. Because if I'm wrong, you're not going to see these things fall a lot from where they are now. They haven't really participated in a rally higher. They're still down tremendously off their highs. So even if you're wrong, you take a little bit of a loss. But if you're right, you're going to see an easy double, maybe a triple. That's how depressed these names are in this sector. And you have a lot of growth catalysts. And you have a lot of value in this sector. And nobody's really talking about infrastructure right now. That's why I love it. People started to talk about home builders. I'm seeing promotions all over the place in the newsletter industry, but still very early to the party. Definitely get exposure to the housing industry and start to get exposure to the infrastructure industry. So if you're a CVO subscriber, Curzio Venture Opportunity, you're going to get a great pick today. I do a fantastic video explaining exactly why I came to this decision. So if you're a subscriber now to my newsletters, guys, this is video newsletters that are like 25 minutes long. It seems long. I break down the markets, but I show you exactly what I'm looking at through my research engines, which cost a lot of money, of how I'm picking these stocks. So you learn from the research that I'm doing, which is awesome. Getting fantastic feedback. And for people who are like, Frank, I don't want to see your ugly face on a video, we also have a PDF of the recommendation. You just got to click that and read it. That's about 3% of our audience. The CVO members, that pick is now available by the time you're listening to this. And be sure to get in. It's a name that I really like.